Hey everybody, I wanted to do a quick breakdown of my US dollar CAD sell position. Received a lot of questions about how I manage the trade and ultimately how I use the 15 minute to get involved since the overall pattern wasn't entirely clear. So I figured I'd test out this TradingView video setting and see how I do. So basically, starting on the weekly chart, it's no surprise that I was looking for sells. I think we all pretty much were with the impulse correction, looking for that impulse to the downside. Let me drop down to the daily here. So basically, the way I was looking at this is price is just correctively trickling to the upside. And essentially what we're looking for is either a reaction to the trend line or a break of this high as we just kind of keep trickling further and further up. And it really comes down to what's probable and what's possible. We know it's probable that it will reach this area, but it's possible that it doesn't have to and that it will just continue to the downside essentially at any point. So keeping that in mind, that's kind of what I was looking at here. I sold US dollar CAD about 16 times in December trying to catch the drop, so I definitely was not going to miss at least the initial drop in January, so that's kind of my rationale here. If I drop down to the 4 hour, what you'll notice is price is essentially just like correcting in this overall kind of ascending channel here. And what I noticed here is that price is really having difficulty breaking these highs. You'll see it with all of these kind of rejection style wicks in this area. And then if you kind of zoom in a little bit, you'll see there's just a lot of impulsive bear candles. So kind of factoring all that in, I was like, okay, this is kind of showing me something that I want to see here. A lot of rejection to the upside. There's a good chance for a sell-off. Dropping down to the hourly, it didn't really give any real clear pattern at this point. I know a lot of people essentially took this kind of ascending channel pattern here for the sell there. Probably got tagged out and break even, but that was definitely a perfect setup there. It was a 15 minute that I really seen this trade develop for me. So basically what kind of framed it up for me was I seen this impulse, kind of this retrace here, and then followed by a bear flag. And those who have talked to me are beginning to know that this is kind of becoming a go-to setup for me. And it was really this bear flag that kind of confirmed this overall idea for me. So impulse correction, looking for that impulse to the downside. If I zoom in just a little bit, you'll notice we have pretty much a third touch and retrace candle there as well. So just a lot of extra confluence. I entered in and around here, just kind of factoring in this low as my entry. I had about a 20 pip stop, which is pretty aggressive given that I'm using the 15 minute, but I figured that was probably okay. I was willing to take that with the break-even method being how powerful it is. So if I just quickly take this back here, I'll just kind of give you an idea of how I manage this trade as well. So as price impulsed to the downside, it was kind of in and around this point that I started to ask myself, okay, what's happening? Can I limit my risk? And I really like to be as risk-free as I possibly can. So it was at this point that I definitely was risk-free. And as it kind of impulsed further down, I was in an appointment, so I wasn't managing this quite as actively initially. But once it kind of hit this area, I factored in kind of this overall smaller correction or smaller momentum in the candles, so to speak. And as it continued down, what I noticed here is, okay, we're getting a little bit of a pullback, which is totally normal considering it's a 15-minute chart, of course. So basically, once it started kind of dropping here, I said, you know what, let's just kind of solidify some more profits. So move my stop down to here, and price began to kind of start beginning to be a little bit corrective. So you see it got very close to being tagged out there. Price really started to show. So this is when I was like, okay, we're kind of putting in this overall kind of descending kind of channel formation here. So I would not have been surprised to kind of see some more upside before further drop. So that's kind of my rationale on keeping my stop as tight as I did there. Then we got this impulsive candle, so everything was kind of looking good. Then kind of trailed my stop loss to kind of fit in this high here. Not a huge difference, but I'll take a little bit more profit here, lock in as much as I can on a move like this. So essentially, as we started to kind of continue impulsing down, things were looking good. And this is kind of where I started to notice we were kind of forming what could have been an additional flag here. So I was considering a scale-in opportunity, but at the same time, because I was managing this trade solely on my phone, I kind of moved it a little bit tighter than I probably should have in terms of stop loss. So what I did was I kind of put it just above the high here. And as you can see by the trend lines that I just have drawn in here already, got tagged out. And as you'll notice, price really kind of formed that little bit deeper flag before we seen the break. So this would have been an even more successful position, but I'm super happy with how I executed it, how I managed it. And a lesson that I'm definitely taking away on this trade was that because I managed it solely on the 15-minute, I didn't factor in this larger correction, generally speaking, looking at on the hourly time frame. So it's definitely a lesson that I've noted for myself in terms of how I can do better. So when I'm trading on the 15-minute, I of course still have to focus on the larger time frames as well from a management perspective. So definitely taking that lesson forward. I hope you took some value from this. If you have any questions, feel free to reach out to me. I'd be more than happy to explain it even more. Thanks.